The market direction can be much easier analyzed using candlestick charts because of the visual aspects provided in each candlestick formation or signal. For example, we could tell that the Dow was running out of steam even though it had broken out through this wedge formation. Notice the indecisive trading, dojis and spinning tops. And on Friday it closed right back at the T-line, which made it very simple. If this uptrend was to remain in progress, it needed to open positive and start trading positive. As we can see, stochastics were rolling over, and after a kind of a bearish doji sandwich and a close right on the T-line, made it very simple. If they started trading it lower, they were taking the markets back into this trend channel, which means it could pull back somewhere into this range or the 50-day moving average. The NASDAQ provided much more clarity as far as which way the market was going. It needed to, after the little doji shooting star of Friday in the overbought condition, the uptrend needed to remain in progress by opening flat or higher and trading higher. The fact that they gapped it down after a doji, and then we can start putting other analytical factors in, that this doji occurred at the same level the markets topped out before, that pretty much told us when they gapped it down on the weaker open today, they weren't going in this direction. They ran into resistance and now back into the trading channel. So the aggressive investor knows that they could be shorting things or closing out long positions based upon how they opened it today, opened the market. And the candlestick charts work with just as much clarity on commodities, basically because candlestick analysis was developed on the most basic of all commodities in the world, rice. We can see that gold, with that little doji spinning top gap down at the 200-day moving average, that gold prices were heading back down instead of heading up. And if you understand that most of the gold or mining stocks are going to be based upon the influence of the gold price, you improve the probabilities of being in the right sector / stock at the right time. Notice the little tweezer top shooting stars, and then he started rolling over with a close below the T-line. So we've been short CN or CENX as well as some other gold stocks based upon the fact that the market wasn't showing any great strength. Gold prices were heading down, and the individual stock charts, we could pick out the best ones that would give us the best positioning. That'll be it. We'll see you in the chat rooms.